Market sentiment, as we've seen, obviously, actually market reacted relatively benign to the positive set of trade negotiations, mainly because we knew this was coming, but this was the easy bit. Now comes the difficult bit, and that is something that won't be resolved for a very long time.
Not going to be resolved overnight. I just want to take it back to something you said right at the beginning. You said that the weakness in the trade numbers that we're seeing today is not due to the trade war, which is interesting because actually if you drill into the details, as you mentioned, there has been a big drop in imports, down 8.5% year on year, but actually imports from the US were down 26%. So yes, within the context of the weakness, imports are slowing down, but they're specifically slowing down from the United States. How can you not say that that's part and parcel of the trade war?
But if you look into the history of the trade data, you'll see actually the shift away from US and also Europe has already been happening even before the whole trade war, as it were, happened. What we're seeing is actually China's trade with countries like Brazil, India, Russia is actually, increasing at a much faster rate. So it's a diversification of trade with multiple number of countries, especially the Belt and Road countries.
Jenny, what is the ramifications for the rest of the region on the slowing imports from China? And again, the focus of the markets has very much been on Chinese exports, but it looks like today the focus is squarely on that rapid decline that we're seeing on the import side of things. And if you look at actually the details on commodities, still growing, but at a much slower pace than it was in the past. What type of effect is that going to have on surrounding countries around China?
Well, both regional and global, in fact, because obviously it's going to impact on the supply chains around China, around ASEAN economies in particular, who obviously produce the lower end of that curve. But at the top of the curve, where we have, for example, Europe hoping to produce and export more and more machines and autos, for example, to China, so the slowdown in domestic spending in China means that weakness will continue for Europe and the US, of course.
Does a triple R cut change things, another triple R cut out of China?
Well, at the moment, China is actually focusing on how the delivery of the interest rate cuts will really take a much more fundamental shift. So it's actually the reform of interest rates that's more important rather than the triple R cuts.
You mentioned autos there, and we got some fresh auto sales data overnight, which was again disappointing for the month of September, which is typically a seasonally strong time for the auto sector. So what's going on there? Is this all about a change in the subsidies program in China, or are there more worrying signals to take from this?
Well, in fact, yes, we just had the national holidays, which actually should be even stronger for September and October sales. But in fact, this again is a piece of evidence that domestic spending, particularly on luxury end of the auto market, may be slightly weak. And probably what we saw in coordination with that is the fact that domestic producers in China, auto producers, are probably seeing a much more stable conditions in China, because actually when you have global recessions, like particularly domestic weakness, we'll see the choice of cars towards a much more average type of, rather than a luxury end of the spectrum. But all in all, I think you'll see that across the curve, so all types of autos across global supply chains as well, and also not to mention electric vehicles is something that's going to be new for China market. So what we may see is that pockets of strength in the auto market, but probably for the wider market will continue to see that weakness as long as China's domestic consumption is slowing.
All right. Well, thank you very much for sharing your thoughts this morning. Ginny Ann, Managing Director, ICBC Standard Bank.
And the World Trade Organization gave the final go-ahead on billions of dollars of U.S. tariffs. They target a broad range of EU goods in retaliation for subsidies given to French plane maker Airbus. Let's get out to Willem, who joins us live from Geneva, just outside the WTO, and obviously a story that you've been following for a very long time, Willem. The U.S. now formally have the go-ahead from the WTO to apply those tariffs in retaliation to the Airbus subsidies. And of course, this was a ruling that came out last week. I guess the bigger question for investors here is, how are the EU likely to respond to this ruling?
So just the context, the US have come out with a statement in the last couple of minutes, Jumana, talking about the idea that they will push ahead with these tariffs. There won't be a negotiation in the next 3 days to halt them, saying, quote, and this is Dennis Shea, the US ambassador to the World Trade Organization here in Geneva, we hope the countermeasures will encourage the EU to agree to a genuine cessation of its WTO inconsistent subsidies and the adverse effects that flow from them. They're saying they would like to see a settlement, much like the Europeans have said they would like to see a settlement. The difference being they'd like to see that settlement once these tariffs take effect. And of course, there's a long period of time between now and when we may get an equivalent ruling against Boeing and against the United States. One key difference, talking to trade experts over the last 24 hours or so, is that while the EU has sought to comply with previous WTO rulings when it comes to subsidies to Airbus, Boeing and the US publicly have done very little to try and stop Washington state subsidies to the US manufacturer. So at some point down the road, we could see a situation where the Europeans are given the go-ahead for their own countermeasures. The US will see their ability to impose these sanctions we're expecting on Friday reduced because the Europeans can prove that they have become compliant. And you could see the tables essentially being reversed, whereby the US will no longer have as much leverage, and it'll be the Europeans that under the WTO framework will have a lot more control. At that point, it will then be up to the Europeans to see whether they do want to push ahead with countermeasures, whether they do want to try and potentially provoke Washington into further retaliation. And that's where investors would have to get very, very concerned, because you could see this move way outside of the current sectors. We've seen 7.5 billion euros worth of tariffs potentially inflicted later this week. That could grow pretty dramatically if you start taking into account the auto sector, if you start talking about further tariffs on things like steel and aluminium that have already been enacted so far. That's where this could get very, very ugly.
Indeed, Willem, and actually new reports are suggesting that the US is considering adding Swiss pharmaceutical products to its list of tariffed European goods. That is according to media outlets in Switzerland. Over the weekend, the US is the second biggest market for Swiss drug makers such as Novartis and Roche. Just a quick look at those two stocks, both respectively down about 1.2% and 1.5 percentage points, adding some pressure on this heavy European morning of trading across the board.
And we've got some fresh comments out of Turkey's President Erdogan. Of course, all eyes on what's happening in northern Syria after the U.S. decision to pull back its troops. When asked about the Syrian deployment to the border, President Erdogan said he doesn't think there will be problems in Kobani. Russia's President Putin has shown a positive approach. He said he's speaking in Istanbul, just to mind you there. He also said that Arabs will be settled in Syria's Manbij, and said that the U.S. decision to withdraw troops from northern Syria is a positive step. That's Turkey's president speaking there, and we will be going into detail on the latest on what's happening in northern Syria a little bit later on in the show.
Well, if you want to get involved in the conversation with anything we've discussed, from the trade war to phase one of the trade war to the trade data out of China, then you can get involved in the conversations. At Street Sign CNBC is where we're at, or you can tweet us directly at CNBC Ju and at CNBC Giuliano.
And it's shaping up to be another busy week in Westminster. Fortunately, Steve is standing by for us.
Yeah, thank you very much indeed. Well, I'll tell you what, it's the most extraordinary country. We're at the height of the Brexit crisis. And what have I just seen? I've just seen the beefeaters, the yeomen of the guard, arriving at Westminster to search the cellars ahead of the Queen's arrival with her carriage, with the household cavalry. All this amidst election fever and Brexit fever as well. Only in the United Kingdom, only in Westminster, and only on Street Signs when we come back.
Can we just order a pizza?
Ready then?
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
At the Bank of Antandek, mortgages are on the menu.
I was in the chippy last night and it hit me.
Go on.
We should give all our new mortgage customers £1,000 of spuds.
Potatoes?
Yeah, jackets, roasties, dolphin wires. I mean, what's not to love?
Hey, yeah, we could call it Mashback.
Genius.
Meanwhile, at Santander, they're giving their customers £1,000 cash back on selected first-time buyer mortgages. See what's possible at Santander.
Lending subject to status and criteria. Cashback given on completion and repayable if mortgage closed within 2 years. Offer can be withdrawn. Your home may be repossessed if you do not keep up repayments on your mortgage.
If you're collecting your prescription, don't assume you can claim it for free. Not all benefits entitle you to free prescriptions. And if you claim when you're not entitled, you could face a penalty charge of up to £100. Thankfully, there's a simple way to find out if you should be paying. Search Check Before You Tick online and use our eligibility checker to find out if your benefits mean you can claim for free. Or you can ask your pharmacy team. So always remember to check before you tick. This was brought to you by the NHS.
You're a small business owner and there's nothing small about what you do. That's why Dell Small Business Technology Advisors give you trusted advice and tailored tech solutions, like computers with Intel Core processors, servers, storage and networking, plus industry-leading monitors and software. No matter your technology needs, Dell is here to help your small business do big things. Call 0800 085 4878 to speak with an advisor today. That's 0800 085 4878.
So you want to go to Manchester, but how? About time you invented your own form of transport. What are you thinking? A kind of seat on wheels? Great. With free Wi-Fi, fancy food and some tiny bottles of wine? Yeah. And this invention, it goes at 125 miles an hour with toilets? You mad genius. What is this totally original creation of yours? Oh, wait. You're going to kick yourself when you realise. Virgin Trains, proudly serving you for 22 years. Free Wi-Fi available across 88% of all journeys, excludes voyages.
Welcome back to Street Signs. UK Prime Minister Boris Johnson's legislative agenda will be outlined today in a speech delivered by the Queen. And just before we head out to Steve, let's take a quick look at sterling because it has been on a tear. That is the trader term has been performing very, very well over the last week or so, up at 125.70, coming off a little bit this morning, down about 0.6 percentage point, but still up about 5 big figures or so just in the last couple of weeks as the market comes to terms with the possibility of a breakthrough when it comes to those Brexit discussions later this week. So all eyes on the summit, but of course all eyes on the Queen's speech as well. So let's get out to Steve, who joins us live in London. Steve, you know, there hasn't been a Queen's speech in over 2 years, I believe, since 2017. Why are they ramming it now, 3 days before this make or break it summit?
Yeah, it's very interesting. I mean, look, we have to have a state opening of Parliament. It's just a question of how we do it. In fact, the real Queen's speech, a full-blown ceremonial state opening of Parliament, hasn't happened for 839 days. You have to go back to David Cameron's government for that as well. And the pomp and ceremony is quite extraordinary. One of the reasons why I think people internationally find this country so quite extraordinary, really, and quite amazing. I've just seen the yeomen of the guard, the beefeaters, going into Parliament via the Queen's entrance, the Sovereign's entrance in the Victoria Tower as well. And of course, historically, our viewers will know this as well, they searched the cellars ahead of the Sovereign arriving there because, of course, we had the gunpowder plot back in 1605 with Guido Fawkes. Didn't end too well for him, of course, but went pretty well for James I, formerly James VI of Scotland, of course. But now, coming back to the 21st century, you've got this amazing pageantry with the Queen and her household cavalry, hundreds of them going down the Mall, through Horse Guards, into Whitehall and here to Westminster to basically lay out the government agenda for the next Parliament. Now, the Parliament is normally circa 1 year, and there are 22 bills which the government have put forward here as well. Now, the opposition has said, hang on a second, this is a stunt, it's ludicrous. This is Jeremy Corbyn talking, and he said basically what you've got is a government general election manifesto being dictated to by the Queen from the Sovereign's throne as well. So he thinks it's absolutely farcical as well. And you have to actually think, it is extraordinary that this government is trying to lay out the agenda for the next year, not knowing what it's going to do in the next week, which brings us back to the clear and present, which is this tortuous negotiation between Brussels and the United Kingdom, which has picked up a head of steam, of course, after last week, out of the blue, after all the doom and gloom. The Taoiseach, the Irish Prime Minister Leo Varadkar, and the British Prime Minister Boris Johnson said, look, we can see a pathway to a deal. It was a coordinated tweet fest from the Irish and indeed from the British as well. Said, yeah, we can get a deal. So hence we saw EU negotiations, Steve Barclay, David Frost, and Michel Barnier and his team all getting into a huddle, which has been going on all weekend and are going to go on the next couple of days and try and get some form of withdrawal agreement with the EU, with the United Kingdom, that can take us to the next stage, which would be a thumbs up at this EU summit on the 17th and 18th. And then another extraordinary event here, which would be a Saturday sitting of Parliament, a special parliamentary session at which the withdrawal agreement bill, if it is presented, if there is an agreement, could be presented to MPs. The problem, of course, is, and we'll find this out in the next couple of days as well, is that the government, as you know, does not have a majority. It has a minority. It's lost 21 of its own MPs because they lost the whip as well. Plus, there are questions about the DUP, who have had a supply and confidence vote procedure support package with this government previously as well. So can they get the numbers? Well, can they get the numbers, incidentally, to pass the Queen's speech? One of our producers, Hannah, pointed out to me that not since 1924 has a Queen's speech, after the 3 or 4 days of debate which we're going to have over the next couple of days, been voted down. And then Stanley Baldwin basically had to lose his premiership, and a minority Labour government took over. So there's an interesting historical precedent, certainly, that perhaps the likes of Mr Corbyn and Mr McDonnell will be looking at. But when we get this Saturday session, potentially we could see all kinds of things happening. One, we could see a withdrawal of bill either agreed to or not, if indeed there is an agreement with the EU in the intervening period. Or B, this is very interesting, the Parliamentary Act, that is the Ben Act, could then force on that day Boris Johnson to send a letter to the EU asking for an extension. And of course, an extension of the Article 50 process. But how long will that extension be? It could be anything from a few weeks to several months as well. That's, of course, if the EU agree to it. So to have a Queen's opening, Queen's speech, opening of Parliament, ceremonial speech, laying out all kinds of things on immigration, on National Health Service, on crime, on rail franchises, on the Mental Health Act, all kinds of things as well. To have that laying out the agenda for the next year. Plus, we've heard this morning that Sajid Javid, the Chancellor of the Exchequer, is going to have a budget, a post-Brexit budget, on November the 6th. It all seems a bit optimistic, and perhaps in this extraordinary time frame that is the Brexit process, everything's being compressed, and yet this government is looking way beyond the next few days. That is ambitious, I tell you.
You know what, Steve, but you broke it down for us so well and helped investors really grasp what is at stake here. Huge week coming up for the UK. And as Steve just said, the UK Chancellor Sajid Javid says a new budget will be delivered within weeks of a potential no-deal Brexit. The Treasury has also announced that Javid will deliver a fresh budget statement on November the 6th. So set your diaries.
Well, moving on to a bit of corporate news for you. SoftBank has reportedly put together a multi-billion-dollar financing package for WeWork, which could seemingly run out of cash by the end of the year. Sources cited by several media outlets suggest the arrangement would hand control of the startup to SoftBank and further sideline co-founder Adam Neumann. Separately, JP Morgan Chase is said to be working on a debt deal for WeWork that could reach $3 billion. Elsewhere, Facebook's Libra project is under pressure after another 5 members pulled out of the association. MasterCard, Visa, and Stripe are among the firms to withdraw support for the cryptocurrency. In separate statements, the company said they had decided to focus on other areas. Facebook's David Marcus played down the departures, saying he would, quote, caution against reading the fate of Libra. Members of the Libra Association are due to meet in Geneva today. And we will have more on Libra later this week when Elizabeth hosts a panel at the IMF's annual meetings. Among the panelists will be Facebook's David Marcus and the Bank of England Governor Mark Carney. Well, we're going to take a short break, but still to come. Ahead of Vladimir Putin's first visit to Saudi Arabia in 12 years, the head of Russia's sovereign wealth fund tells CNBC relations between the two countries are blossoming. We'll cross live to Riyadh next.
We all know that movement is like medicine, but getting the movement you need to feel better can be a...
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want football, how about the Premier League? Or crime dramas? I've got loads. And they're never going to guess who did it. Or how about dramas? I've got Emmy-winning shows. Oh, I know, so fancy. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply. Stop right there, peoples of London. If you eat your lunch al desco, or your mouth water when microwave go ping, then you commit crimes against cooking. So thank goodness for Meerkat Meals. Dine out with 2 for 1 on food at your local favorites, like Chicago Rib Shack Wandsworth and Prezzo. All with the Meerkat app when you buy, so compare the market. Oh, lunch is ready. I'll get my code.
Qualifying purchase 2 for 1 on equivalent starters, mains and desserts, a la carte only, Sunday to Thursday, T's and C's and exclusions apply.
Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica, sip margaritas in Mexico, or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details. At all protected.
The Peugeot Professional Van range is the beating heart of businesses across the UK. Whether you're on the road with only your DAB radio for company or navigating tight spots with rear parking sensors, all Peugeot Professional Vans give your business that edge. Visit your local Peugeot dealership during our October van event from the 10th to the 31st of October and drive away with an exclusive finance offer. Master the impossible. Peugeot Motor Company PLC is acting as a credit broker, not a lender. Finance subject to status. Terms and conditions apply. Business users and over 18s only. Guarantee may be required. PSA Finance UK Limited.
Carl's All Change Casserole.
So, Chloe walks in from school, tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat, but not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch, a dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range, Food Love Stories, brought to you by Tesco.
Well, welcome back to Street Signs. I'm Juliana Tattlebaum.
And I'm Shimona Bersetchi, and these are your headlines.
The global rally loses steam as Europe fails to pick up on the trade deal optimism after the U.S. and China agree a truce and the first phase of an agreement.
The World Trade Organization gives the green light to the United States to impose tariffs on EU imports over Airbus subsidies.
Shares in UK house builders and banks among the biggest fallers on the FTSE as the UK and EU say work remains to reach a Brexit deal ahead of a key summit this week.
And the U.S. pulls its last troops from northern Syria amid a growing offensive from Turkey, while President Trump threatens powerful sanctions on Ankara.
All right. Well, European markets starting the week out on a bit of a negative note, but bear in mind, of course, this comes after an incredibly strong rally on Friday when the Stoxx 600 ended more than 2% higher. The DAX ended nearly 3% higher. So yes, we are seeing a pullback this morning, but a lot of that optimism that we saw on the back of an improvement in U.S.-China trade relations did come on Friday. So investors now pausing for breath as we await the details of those the outcome from those trade talks. Now we've also are digesting a raft of China macro data that came out overnight that was on the weaker side, so downbeat. Question now, how much will Beijing move to stimulate the economy, and how much of that downturn is actually the result of the trade war? And then, of course, Brexit front and center. The FTSE 100 down about 0.4% this morning, really in line with broader European markets. The more interesting story perhaps coming through sterling, which we will look at in just a second. But first, let's take a look at sectors and see what the breakdown looks like. We are seeing basic resources log the worst losses of the morning, down more than 2%. Banks also down significantly, about 1.6%. Within the banks space, UK banks underperforming. But again, this is after strong outperformance on Friday on the back of optimism around Brexit. And of course, today, a very big day for Brexit with the Queen's speech coming up. So on that note, let's take a look at where sterling stands this morning. Right now, trading down about 0.6%, but still above that 125 level. We are coming off of the biggest two-day jump in more than 3 years. So we saw quite a rally in sterling at the back end of last week. Euro also trading lower versus the dollar, but again, last week we saw some pretty decent gains for the euro against the greenback. Finally, let's take a look at U.S. futures and see where things stand for the opening of the U.S. session. Very muted start to trade. You can see there the three major indices set to open a touch below the flat line, but overall very contained. Just to mention, on top of trade, on top of the ongoing impeachment inquiry, we are getting into Q3 earnings season, so that's going to be a big one for U.S. investors to watch this week as well. Jemana?
All right, turning to international politics, French President Emmanuel Macron and German Chancellor Angela Merkel have urged Turkey's leader to halt a military operation into northern Syria in separate phone calls this weekend. Macron said the operation risks creating a, quote, unsustainable humanitarian crisis. And both Germany and France have also suspended arms sales to Turkey. Meanwhile, the United States says it will pull out its remaining 1,000 troops from northern Syria. U.S. officials say the removal will take place, quote, as safely and quickly as possible. The announcement comes as President Trump faces mounting criticism over his decision to take U.S. military forces out of the region. In a weekend tweet, he threatened imposing, quote, powerful sanctions on Turkey. And NBC's Richard Engel filed this report from inside northern Syria.
The U.S. is getting out of Syria at the worst time, just as Turkey is making rapid advances in its war against U.S. allies, the Kurds of Syria, advancing with the help of Arab militias, U.S. officials tell NBC News. And they say the militias include former members of Al-Qaeda and ISIS. It means Turkey, a NATO country, is using alleged terrorists to attack the Kurds, who fought with U.S. troops against ISIS for 4 years and carved out their own unofficial little state in the process. Now that autonomous zone the Kurds call Rojava is collapsing. And as the Turks and their militias push deeper into Syria, the big news dropped like a bomb. Nearly all of the 1,000 U.S. troops still in Syria are leaving, announced by Defense Secretary Mark Esper.
So I spoke with the president last night. He directed that we begin a deliberate withdrawal.
With no U.S. protection, the 2 million Kurds in Syria fear they'll be ethnically cleansed by Turkey and its militias. And ISIS is seizing this chaotic moment to regroup. Hundreds of family members of ISIS fighters today broke out of a detention camp. Amid all this, President Trump tweeting, the Kurds and Turkey have been fighting for years. Others may want to come in and fight for one side or the other. Let them.
And tonight, facing an assault they cannot stop, Kurdish forces called on Syria's president, Bashar al-Assad, an ally of Russia, to deploy along the border. It's the end of Kurdish self-rule here, which they earned fighting alongside U.S. forces. A U.S. official told me it's a failure of U.S. values, helps American adversaries, and gives ISIS a new lease on life. Richard Engel, NBC News, Northern Syria.
And let's bring in Mary Jo Jacoby, former U.S. Assistant Secretary of Commerce, who joins us in the studio. Thanks very much for joining us this morning. So just coming off the back of that report from northern Syria, President Trump sees this recent move to withdraw troops as fulfilling his pledge to withdraw from endless wars. But doesn't this undermine trust in the U.S. as an ally?
I think it certainly raises a question about how reliable and formerly indispensable the United States was to its allies. And it is a clear signal of a change in direction for the U.S. with respect to the Middle East more broadly. The question that I have is, if there is a vacuum that's created by the U.S.'s departure, who will fill that vacuum? The Turkish situation is driven by domestic politics, both in America and in Turkey. And of course, the ultimate loser will be the Kurds. But will the U.S. win, or will Turkey win, or will we have a situation where everybody loses? As I understand it, we're withdrawing the final troops from Syria, but we're also committing troops to Saudi Arabia. What I'm watching this week is President Putin, because he's visiting the Middle East in Saudi and elsewhere. He has said that he is furthering economic diplomacy. And my question is, will Putin